Greetings! This is the Bear Market Report with Teresa Bear
and Desert Bear. The subject of today's report is life insurance. Are you paying too much?
Now let's go back and look at the factor involved. The tables, which, can you explain what the tables are, please?
Yeah, those are the Commissioner's Standard Ordinary Mortality Tables, or the CSO. It's kind of a long name, but the tables are what the insurance commissioners use as a standard pricing model for insurance policies.
Now, the interesting factor about these tables, they're not done on a yearly basis. Matter of fact, they're done on an interval factor. Point of example, in 1988, now why is 1988 so important?
Well, the 1980 tables were updated from earlier mortality tables. Every so often, the insurance commissioners look at mortality, and of course, we've been living longer for the last few years. So in 1980, there were some new tables put out by the insurance industry to be used in calculating policies. And those were in effect in 1988.
Now, the factor involved is if you have a policy that was done before 1988, it's based on the old information, you could actually be paying more for insurance if you obtain your policy before 1988.
Right.
Now, after 1988, because the increase in lifespan and developments of medicine and other factors that are causing people to live longer, you could actually be paying less for insurance than you were before 1988.
Right, and again in 2000, the mortality tables were again updated, again showing our longer life expectancy, and those changes were implemented a few years later. So we have 1980 tables, we have the 2000 tables, and that really affects the policy pricing of your policies. Because if you're living longer, then you're going to be having lower premiums and possibly a higher death benefit.
Now, the important factor about this, if you haven't had a professional look at your insurance and factor the costs and what you should be paying, you might be paying a higher rate than is necessary. So I would literally ask a professional, and in this case I would, for example, would be my wife, who's a certified financial planner, who would be able to see whether you're paying too much in reference to insurance. And if you can save a buck, that's always a great thing, and there's no need to be paying more than you should be for insurance.
So some of these pricing models can affect your premiums by 30, 40, 50% depending on when that policy was put in place. Obviously, there's going to be differences in your health, and that affects your life expectancy. But assuming you're in decent health for your age, you may be able to save substantial amounts on either the premiums, or you may be able to get a higher death benefit for the same amount of money. So be sure and talk to a qualified insurance specialist, can do a policy review and see if you can get a better deal than what you previously had.
And all of us are looking for a better deal. And again, I'm trying to be the devil's advocate and trying to put a little voice in your head that if you haven't had it updated recently, I think it's time that you should seek out a professional and get some advice.
This has been the Bear Market Report. We'll talk to you later.
Bye. Bye.